We thought that technology would solve everything. And so we started researching, just like any other young organization. We saw the likes of the tech you're talking about, that you can have a cow wear a collar that reads the cow's, bodily functions, the same way you wear a smartwatch. You can know that this cow has walked maybe 50 steps, as an example. It's rested in one position for about 2 hours. That shows something is wrong. Possibly even indicate that the cow is on heat. So some of these solutions are very good, extremely good, but they're not for our market. Some of those technologies, especially the ones in developed worlds, require a farmer to be interfacing and engaging with this platform, which is good because the farmer has a right to as the consumer. But unfortunately now in our case, most of our farmers are elderly and they are not technologically savvy. When you go to rural Kenya or any rural setup, mainly in the continent of Africa, you'll find a farmer who is not poor, but they don't have money, cash, but they have assets. So how do you call that person poor? And we've seen this a lot in Narok, where you have a farmer who is asking you for only 10,000 to either do an emergency payment, a bill, all those things. And yet, this customer has about 100 cows. You'll find a farmer who is keeping records. They have a much more better way of understanding their livestock business than the one who's not keeping records. So the one who's keeping records, they are able to tell you, I bought this cow this year. This cow is this old. This cow has been treated for this, immunized for this, treated for this. And this cow is insured. And this cow possibly has even serviced a loan. If they want to dispose that cow, and they bought it maybe for 70,000, they can easily sell it for 100,000 because they have records.
What's up, everybody? Welcome to the Organic Guy podcast. This is your home of organic conversations. I'm your host, the Organic Guy, and right around here we have conversations on how we can make our food systems really get to work for us rather than against us. Today, I want us to have a very different conversation because most of the time we usually talk about crop and agricultural production, but today I want us to dive into livestock production and how can we make it a little bit more productive, right? And from a technological point of view, can we actually integrate data to sort of make our livestock production more valuable and make it more investable in terms of taking to the banks, and farmers can be able to get credit and all sorts of help in their agricultural journey. To help me have this conversation, I've got the founder of Imfuyo. He's called Bernard Njathi. Bernard, welcome to the podcast.
Thank you so much, Brian. Thanks for having me.
You've got a really interesting thing going on with the Imfuyo. I was really interested to see how we can sort of have those conversations and help people understand that livestock can actually be investable if we can actually give it data and sort of give it a little bit of meaning behind it on what farmers are doing. Before we get into the nitty-gritties of the conversation, just give guys a little bit of feedback about yourself, like where did you grow up, how was the environment like growing up, and how you ended up starting sort of a livestock company.
I have one of those interesting stories, so to say, and majorly because I see my story as a story that is filled with the grace of God, So first things first, I'm a firm believer in God, and that drives me in everything that I do. Secondly, to answer what you've asked, I was born and raised in two places, in Embu and Nairobi. And whenever we would go back to the rural home, which is Embu, where my grandfathers bought land from Kirinyaga, I would always see my grandfather then, I was 5 years old, trading a lot of livestock. And that somehow was engraved into my mind until Imfuyo came. But just before we get to that point, I am also a student of business administration. I'm also a student of procurement, and I'm also a student of insurance. And most importantly, I'm a student of life. Someone told me that I seem to have lived many lives than many people at this age. I'm in my late 30s. I'm a married man with 2 sons. And what I live for, to be very honest, is to try and change lives while using data and finance in the livestock value chain.
So when you say like you lived in an environment where you could see your father sort of like trade livestock and stuff, at that point, what was your aspirations growing up? Was it like to follow in your father's footsteps?
I am always controversial with that statement, mainly because there is what you want to be because of your environment. Then there's what you honestly want to be because you feel as if it's what you're called to do, and you don't even understand it until later on when you're a bit mature. So growing up, of course, I had no dreams whatsoever of doing what I'm doing, not even a plan, not even an idea. I wanted to be a doctor. At another point, I wanted to be a policeman. You know how kids are. But progressively, as you grow, it starts transitioning into other bigger roles based on the environment, based on how you are seeing society, etc., etc. So I wanted to be a doctor. But the environment around me kept shaping me all the way until where I am, because I had a corporate life for about 10 years and now 5 years in entrepreneurship.
You said in your late 30s. During like your corporate life, did you have like an inclination to get into the agricultural sector in one way or another?
None whatsoever. And I'll be very honest with you. It's one of those stories that many things come together. You know, I said I'm a firm believer in the Word of God. The Word of God says in Romans 8 verse 28, Romans 8 verse 28, that all things work together for my good, for those who are called, as saints of God. So I want to believe it's one of those stories, because I never went to school for agriculture. I never went to school for actual finance. However, I did in school business administration, management, and procurement. But in my corporate journey, I was heavily influenced by technology and financial services. I have been in tech for quite a long time, from 2013, which really shaped my way of thinking how you can actually use tech to solve different challenges. To add to that, financial services. So in my earlier life, I was in insurance, and that actually, is nicely plugged into our ecosystem. So I didn't have a framework of what I needed to do and how I needed to do it, but things came together in my corporate career, where I focused a lot on technologies and financial services, and then progressively now, what I call my subconscious started to remember what I used to see my grandfathers do, because I come from a prominent family of livestock traders, so to say, in the 60s and the 70s. My grandfather used to sell even 300 livestock in a month. And at times we'd find ourselves being told to walk like 3 kilometers with cows and goats. And we didn't even know why we were doing that. And at times you would see my grandfather and my father standing somewhere and speaking to different people, telling them about livestock and selling them and all that. So I think it all comes together depending on the purpose that you have for this life.
You say that you have an interest to seeing tech sort of helping people. So take us through, how do you come to decide to get yourself involved with sort of helping livestock farmers?
So the story is a bit diverse, but allow me to just build it up to where. So in my early years, I did a lot of financial services. This is selling different classes of insurance. So that was my earliest, I think, corporate gig. Before I did any other gig, that was non-corporate. When you're out of campus and you're hustling left, right, and center, you want to do all things. You're selling Safaricom lines, then Airtel lines, Zen lines. You're doing activations, events in clubs, all these things. And then you get into the financial ecosystem. For me then, was actually selling livestock. Was actually selling insurance. And at that time, insurance was very different. It's not like now. Tech had not yet been, considered to be a driver of insurance sales. Even now, it's not yet that high, but it's a good, considerable change, so to say.
When you say like tech, a seller of insurance, what do you mean?
What I mean by that, and I'll be very practical, when we used to sell insurance, and I used to sell all classes of insurance, we would have to sell manually. And manual in this case is not just even talking, it's actually the process. We had these books that had different formulas. I'd come to you with a book, and then I'd ask your age if it's I think a life policy or something like that, or investment policy. I'd check a certain number somewhere, and I would remove a big calculator, and then I'd calculate. This is as early as 2008 there, and tech was not really considered something that would make sense for selling insurance as a channel. So those are some of the things that started shaping my thinking, because I was always very enthusiastic when it comes to technology. And then progressively I moved away from that class of financial services and got into media. When I got into media, then I had a whole different perspective, because as much as I was selling, I was also still in product development in the media space. Would sell newspaper advertisements, would sell radio and TV, and that kept, giving me diversity and helping me to understand anything that is product, anything that is value, anything that is customer. And then progressively I got into now fintech. This was in late 2013. So I'm just trying to build it up to the point where I get to answer your question.
So in the selling of advertisement, how does it actually work for like someone who is, so I'm assuming you're attached to, let's say, NMG or Standard Media. So they usually give commissions, usually 1%, 2%.
It really does depend, I think, on the media house and also the product you're selling. But it can be anywhere between, I think, 20%, which is good, or anything between 10% and above. So just continuously building it up based on the question that you've asked. So I got into the fintech ecosystem in 2013. That was pretty early. Then we were not even calling it fintech. We were calling it ICT, I think, and it was not as of focus as of now, because there's a whole lot of conversations around fintech, which most of it we tested in 2013, to be honest. So I started selling payment gateways, and payment gateways were pretty early in 2013. And for us to actually sell you a payment engine that processes mobile money, Visa, MasterCard, and other classes of cards from your website, or possibly even a mobile app, which were not very popular then, we needed also to build the understanding of what we are doing to customers. For instance, I remember we used to go to town CBD and go to stalls where they're selling shoes and clothes and all that, and would help them understand that we can use tech to actually help you sell more of your product from the comfort of your stall or your office. So we'd have to teach them what is a website. I'm not saying that people didn't know, they knew. But then what is a website that can actually be able to use to sell products and services, which is now e-commerce. So we'd have to do those basics, mainly because we're trying to get to a point where they're saying, now I want your payment gateway. Then we'd also help them to create a shop and help them understand this is a virtual shop, which equally translates to your actual physical store and has inventory and all these different things. And then we would move it all the way to a point of, now you understand what tech can do, you understand the e-commerce ecosystem, you understand the stocking and the shop and the inventory. Now we need to plug in the payment gateway so that at least you can be able to accept Visa, MasterCard, M-Pesa, Airtel Money, etc., and even a wallet. We did that in 2013, and that time it was pretty early.
Was Jumia already in the market?
Jumia was in the market, but as you know, very few people were consuming it then. And even if they were consuming it, most of them they were not ambassadors of the product. It's not like the way you drink a good beverage and you're talking about it left, right, and center. You don't buy something on Jumia and then go post it on Facebook, I've bought a new shoe. So that's the case then. So just building up on that journey in the fintech ecosystem really taught me a lot, because I was a product manager, I was a business leader, I was a strategist, I was reporting to the board and to the CEO at the same time. I was leading big accounts, the likes of Nairobi County, NHIF, and all that. So I got to touch a lot of things that I had no idea they were going to just come together, whether it is private sector or public sector, whether it's product development, whether it's tech, very early on. And that's why I told you earlier that I had absolutely no idea that all these things would come together to actually make sense and to try and solve a much more bigger problem in the society.
Okay. Yeah, that's a pretty nice overview. So you've gone through insurance, media, fintech.
Media tech as well. I was also in media tech. So at one point in 2018, I started selling what is called conditional access systems. Conditional access systems is systems that power media, or that power, the dispersing and the consumption of content. It could be a digital box. You remember the GoTV stuff and the Zuku and all that. So we used to build those things from scratch. I used to work for a Spanish-Indian company heading the whole of Africa, and we were literally building that hardware and the software. And then we were also building what we used to call OTT, over the top, at the same time VOD, video on demand. And still such solutions were not very common. The good thing about our market, which is Africa, we always frog leap. Some of these technologies have taken so much time in first world markets. They have made errors and errors and errors. Somehow we just frog leap all that, and we find ourselves actually making those specific technologies here and easier.
Yeah, pretty interesting. So you get involved yourself in all that ecosystems. At what time do you decide to get involved in sort of the agri-tech sort of side of things?
So the story still continues. There's a lot of what I call seeding kupanda. And I didn't know. I had absolutely no idea. Now I look back and I see all the different pieces that keep coming together, and I had absolutely zero idea. And I say that with honesty. So at the fintech ecosystem, we learned a lot. And the journey still continued, and I got into the financial ecosystem now of lending. Remember earlier on it was insurance. Now I got into the ecosystem of lending. Not just lending for the sake of lending. Lending, we're using algorithms that train us to lend better as we read the data and as we collect the data. I used to head a DCP, digital credit provider. Then there was no such license. It came in later, I think in 2020, by CBK, Central Bank of Kenya. And that also gave me an exposure. Because I remember one model which was quite interesting, and it builds up still to this question towards where we are headed. One gentleman from Kisii wanted to borrow 500 Kenya shillings through the mobile app. And he tried it and it failed. And he called through the customer care. And the contact was given to me, and I got curious. I said, okay, he has really insisted that we need to call back. And so I called back, and the gentleman was telling me he's a business person and he has different businesses. And, he has maybe a clothes shop, he's selling bananas, those type of hustles you have, like 5. And he's doing well, a hardware, and he's doing very well. And he just urgently needed 500 Kenya shillings because he saw our advertisement on Citizen Prime Time. And the minute he didn't get that 500, he said he must call the next day. And we started speaking, and we asked ourselves, this gentleman needs only 500 bob. We can't give it to him because when we score him, because we were pulling CRB records, we are seeing that this gentleman has, a non-performing loan, and it looks a bit risky. But then again, he told us he's moving so much money in M-Pesa, and he was wondering, why is it now impossible for us to give him just 500 shillings? So we had to ask him, just give us your M-Pesa statement. And we look at the M-Pesa statement. Weekly, this guy was pushing upwards of 500,000 to about 2 million. Cash flow just passing through the M-Pesa. And so he told us, even if you give me that 500 bob, I can pay it within a day or two because he has a lot of running cash flow. So he opened up our eyes to understand that the financial ecosystem that we were building then was still flawed in a way, because every metric of analyzing credit worthiness was built up on only 3 things. The first one is historical data from banking ecosystem, which is pretty okay. The second one is based off scrapping messages and all that. And then the third one is based on our own internal, grouping. We're saying this is risky, this is less risky, etc., But when he gave us the M-Pesa statement, we got a light bulb moment. And we said, then we need to build a model around that goes against what we were trying to do. And I think we were pretty early as a DCP then in 2018, 2019 there to do that. So when I got into that ecosystem of lending using technology, it helped me also as a product manager to also realize that there are ways you can make financial lending much more better. We are not yet at the apex as possibly traditional banking wants us to think. If you don't get a loan, that means you're completely disqualified in any way. No, that's not true. So all these experiences just kept coming together and together and together until late 2020.
Did you give him the credit? I mean, I'm just wondering, because that kind of data requires that they themselves give it to you, right? So that could be like a prerequisite. If someone has some sort of data that you don't have access to, they themselves have to make like the effort to sort of say, hey, I have this data, look at it, and then from that information you can make the decision to give him some money. So that's what happened.
That's exactly what happened. So first the gentleman said he didn't even know how to get the M-Pesa statement. So we had to teach him how to do it. So he had to, how you dial up the code and request. You dial the USS, the Safaricom SSD code, and then if you have a registered email address, it sends you a copy in PDF form. So we really had to help him do that, and he did it. Then he sent it to us via email. He went to a cyber cafe and sent to us via email. We studied it and looked at it and said, hey, there is a huge chunk of customers out here that are not accessing capital, and not necessarily because they are unworthy in terms of credit, but mainly because the model is flawed. So what we did is that we opened up a way for customers to upload M-Pesa statements. So they upload, the engine at the back tries to look at the numbers and says, possibly based on the model, this person is risk A or risk B or risk C. Then now you add all the other layers of scoring, whether it's CRB, historical banking data, or it is just our model of trying to see how do you position this guy. Does he have an unperforming loan? Is he paying it? All these different things, we bring them together, then we get a score.
Yeah, interesting. So that was like sort of an extra variable to your system that was added.
Correct. And it's not something that we went out looking for. And that was in 2019 going to COVID. A customer just saw a problem and they understood that they need credit. And because they can actually support it out of their own cash flows, they opened our eyes. It's the same case with what we do now in Imfuyo, where definitely farmers are missing out on credit, and not mainly because they want to, but the way the system is flawed. So the problem is all these financial ecosystems model out here really try to put it as if what they are doing is the only way. But no, we are not yet at the apex of lending here.
So you do that. It's, I think, early 2020, COVID hits. Then what happens from there? That's when you decide to go into livestock.
So we are getting there. And when COVID came, then we had a whole different understanding of the problem. Because remember, the president said that anyone who was alone because of COVID has been pardoned for, I think, was it 6 months? Or 9 months, something like that. I think it was maybe 9 months or something like that, or 6 months. And that really hit that business, which somehow taught us our current business. Because now customers would say, we are not going to pay. The president has said we should not pay. Then the president also came back and said that there will be no interest that grows on any loan. Yeah. And then credit providers through technology, maybe through mobile apps, were not yet regulated. DCP. The DCP had not yet been properly initiated. There were talks at the CBK and all that. And number 3, this is an unsecured loan. So the customer will tell you literally, sikulipi, as in I will not pay you and there's nothing you can do. And some of them were truly genuine, because you find when COVID came, everything just shut down. So you'll find someone who was getting about 500 from us, they buy something, they go to the street and sell it, and then pay us back maybe within a day or so, then take another 500 somewhere else, do something similar, come back to us, like that. So there was no movement because we were under lockdown and no movement, social distancing, blah, 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 and all that. So the default book ballooned to 222 million cumulatively by August of 2020 in that business. And we were literally at a point where you cannot do anything. I remember we had gotten debt correctors, about 11 of them, and they were trying their level best, but it was like trying to get blood from a rock, because you're really trying to hit it and hit it and hit it. Nothing is coming out because of what we were going through as a country, as the world and the nation. The financial systems were really affected. That taught us something which we apply now in our business, that the customer behavior when it comes to repayment, when it comes to crisis, when it comes to understanding all these different metrics of how customer behavior can quickly change. Yeah, so close of that in 2020, that's when now I jumped into entrepreneurship. I was always an entrepreneur from as early as 2011, because I would always sell many different type of things. But now, after having gone through that process for about 10 years, a different version of me was created. And then now I started asking myself, what can I do? Because I had just lost that job. Now that I understand technology so well, in terms of a product manager, in terms of a business person, in terms of a leader, and I've had all this journey. Then I started also having a moment where I would think a lot, what can we do? What can I do? Like I said, I didn't plan for this. I purely believe on divinity, God's purpose for life. Then I started remembering. It's ironic because all those memories started coming when I'm a grown-up. I would see my grandfather and my father standing together. These are my early memories of when I was 5 years. And when they were standing together, they were speaking to other people who were buying livestock. And I started asking myself, how does that work? Because when you go to rural Kenya or any rural setup, mainly in the continent of Africa, you'll find a farmer who is not poor, but they don't have money, cash, but they have assets. So how do you call that person poor? And we've seen this a lot in Narok, where you have a farmer who is asking you for only 10,000 to either do an emergency payment, a bill, all those things. And yet this customer has about 100 cows or even 50 cows. And we started asking ourselves, then what can we do? We started researching, and we bumped into a 2017 law called the Movable Property Security Rights Act, which allows the use of livestock as an asset to acquire a loan. Then we started asking around. Remember, I was coming from a financial ecosystem, so I was able to understand the technology ecosystem. I would ask so many questions. I would go even to the Ministry of Agriculture, State Department of Livestock, and talk to people. I would go to Kenya Veterinary Board, Kenya Veterinary Association, and I would always ask all these questions. How are you saying that livestock can be used as an asset to acquire a loan, but if a farmer literally walks directly into a bank right now, it's not that easy for them to get that loan? It's not mainstreamed. And the reason why I say it's not mainstreamed is because we still have less than 4% of national credit going to agriculture, and not agriculture as a whole, not livestock as a whole, but the full number, 4%. So you can imagine in agriculture, it's mainly in livestock, so it's extremely, extremely low. Even when you talk about livestock insurance, it's even lower than that. So that's where the curiosity started brewing in late 2020, and it led to the product.
Yeah, that's quite interesting. As you said, truly, you couldn't sort of have written that script through everything that the journey that life has taken you through it. So it's quite interesting. So in like a snippet, like what do you then offer? Is it mainly for livestock farmers or for farmers in general?
First, Imfuyo is a data and finance company in the livestock value chain. And what Imfuyo does is to make the farmer bankable, while the livestock investable or lendable. And that's on the side of the farmer, which is a B2C model we have, business to customer or consumer, where we are creating data sets of the farmer and the livestock and running it through our internal algorithms to make sure that this customer is actually bankable and the livestock is investable. Then we work with banks and microfinances and unlock some money for this customer. That's on the B2C model. Now, on the B2B model, we're working with farmer groups, dairy cooperatives, common interest groups, chamas, rural chamas or farmers that are keeping cows and goats, or who wants to keep or they want to get into that business. And we still have a B2B model where now we invite financial institutions, microfinances, insurance companies and banks to reason and sit down with us and work out a different product or just modify some few features and then bring it into the market, mainly for livestock farmers. While doing so, we also help them to really modify how their product sits, we really don't have farmer-centric financial services. We don't have, yeah.
Yeah, and I guess why we don't have it's because, as you just said, they don't seem to be investable, or they don't have like data for them to go show, let's say, a financial institution and tell them, hey, I have this X number of livestock, or it's worth this much, and then you can be able to lend me this amount of money. So that's quite interesting. So I'm wondering, like, for a typical farmer, let's say they have like 100 cows somewhere in Narok, and they want you, or they want your services. What is the process? How does that process go, like from onboarding to sort of them using that services?
So first things first, we highly discourage working with farmer one, farmer two. In other words, an individual. The risk is higher. We have been burnt and we know that. The risk is higher because when you have just one customer and you've given a loan to this customer, there is no common group goodwill. It's just one person. So, multiply that by 10 customers, or for purposes of an example. Each one of them is a different customer with a different persona. This one will dodge your calls. That one will say they just needed the loan for A, B, C, D, they have cleared it. The other one will not pick your calls. The other one can easily block you in every way. They block your call, they block your SMSs, and the other one can easily just disappear. Or they can sell their cow any minute they want. So governance and risk become affected. So now we are highly discouraging lending to farmer one, farmer two, in other words, an individual farmer. So to answer you, we group farmers.
Is there like a minimum number of cows, let's say, a farmer needs to have?
At least 2 cows and above, if we are talking of the group setup. And we mainly encourage on either a dairy cow or a dairy goat. And mainly because we know these assets or these classes of collateral at least can also generate revenue by producing milk. So in other words, we have looked at our model and said, we are not just going to lend blindly, but we are going to be diversified. So to continue answering your question, what we do is that first, we approach farmers and put them into a group. And that helps us with governance because a group has a chairman, a secretary, a treasurer, possibly it's even listed or registered. They have a certificate. They have maybe a group account. They have some savings. They have membership fees. They have meetings. So the risk keeps on going down, making it easier for us and the financial partners that we work with. Then the group setup is also important because at least you can educate them. And in educating them, you're also promoting financial inclusion, financial literacy. And at the same time, because we deal with livestock farmers, we also have veterinary, officers and veterinary surgeons, production officers, nutritionists. So we are impacting this community with more knowledge. Instead of dealing with one farmer, we deal with a group of farmers, then it creates a ripple effect for the community. It becomes much more easier to actually grow the business of livestock enterprise if you're dealing with a livestock group, so to say.
So let's say you have then a group, let's say probably 10 individual farmers who are in a group. So they come to you, and then what do you do to them in terms of like helping with their livestock? What exactly are you sort of helping them with?
Yeah, so if we are comfortable with the group structure and the group governance as far as risk is concerned, then we go to the next stage. The next stage is to look at what are they currently doing. It's always good to work with a common interest group, or in other words, a farmer who at least has appreciated livestock can be an enterprise, not just someone who wants to do a hobby. And that's a big mistake. There's a digress for a minute. You have what you call telephone farmers. You are in Nairobi, you have a bit of capital, you get a farmer guy or a farmhand, you buy some cows and goats and you put them on Ushago, the rural area. So you're just a telephone farmer. Most of the time, such businesses fail. So we look at the interest. So now, once we established that there's interest in keeping dairy cows or dairy goats, then our program now becomes easier. Because now we can see, based on analysis, if this group has cows, now what do they need? Possibly they need a bit of financing to increase their milk production, if we are talking about dairy cows. So what they need is fodder financing. Can they qualify? There are a couple of things that we do. If they don't have the cows or the goats, what can we do? Can we be able then to give them an asset related finance? Maybe we can be able to co-finance with the farmer and the financial partner up to a certain percentage. Let's say they have about 10% upfront deposit to show commitment and seriousness, and then the 90% is given out by the financial institution. So there's a series of criterias we review once now we have realized that the group is governable and it has governance and it has direction and it seems to have a common interest in making sure that they're getting into the livestock business with intentionality. Then now we go to the next stages of now being able to analyze what is the actual financial need, and then we take them through some classes, and then we start collecting some data of the farmer and of livestock if they have. Then from that point, then we can be able to bring in our financial partners and look at these scorecards and say, this group is okay, maybe they're a bit early, this group is okay, they can start with this much and not this much. And as we do that, we are going above and beyond lending. We are also making sure that these farmers, one, their livestock are tagged. We have data for their livestock and we have data of the farmer. Two, the livestock are also insured. Very important. Mortality. It's a mortality cover. So the animal passes, they get about 100% or 90% to 100% of the value recovered through the insurance company, which is also a plus because the loan is secured by the asset. Then the third thing, of course, is that we are teaching them how to keep records. Very important. You'll find a farmer who is keeping records, they have a much more better way of understanding their livestock business than the one who's not keeping records. So the one who's keeping records, they are able to tell you, I bought this cow this year, this cow is this old, this cow has been treated for this, immunized for this, treated for this, and this cow is insured, and this cow possibly has even serviced a loan. If they want to dispose that cow, and they bought it maybe for 70,000, they can easily sell it for 100,000 because they have records. They have a certificate of valuation which we give, which shows value as well of the same asset. So above and beyond just being able to use data for record keeping, we are also training them to also keep records for production, for nutrition, for health. This is important because you see, unfortunately, most of our livestock farmers don't consider their enterprises as businesses, and they are truly businesses. They need to be able to understand that you're having a situation of money in, money out. I remember there's one farmer that we went to in Murang'a, a very prominent farmer who has a lot of livestock, and his biggest challenge was records because he had all these dairy producers and he's busy at the office and he's employed farm managers, and they would always ask for, different types of fodder, and they would never keep records. So when we tried to piece some few payment messages here and there, we realized the gentleman was using anywhere between 1.5 million to 2 million worth of fodder month on month. And he has about 60 dairy cows. And the problem was he was not making money. The costs were always higher than the production. And it was not only a factor of, optimizing production. It was also a factor of cost. So the farm managers were also not honest. So just going back to the point of being able to keep records genuinely. The same way you'd want to have records of your shop, assuming you have a retail shop, You'd want to keep records so that you can see the thin margins, you can see the errors, the data speaks to you. That's the same way we help farmers understand. But even as we do that, we go above and beyond that because we also get the market. If we are starting with a group from the ground up, especially dairy goat farmers, we are able to secure for them purchasers of dairy goat milk. You'd be shocked that a dairy goat milk value chain is a very silent market. You know, how often do you hear someone telling you they've had a glass of goat milk? Rarely. But dairy cow, it's all the time. And 1 liter of dairy goat milk can go as high as 500 Kenya shillings, depending where you're selling it. Even when you go online now and just search some of the companies that are selling dairy goat milk, you'll find some of them selling 5 liters for even 2,000 Kenya shillings and above. So we go above and beyond just using data and financial solutions to also helping farmers understand that there's a market. And we plug you into the market. And then we do the same cycle over and over and over again. So we're not just unlocking capital for the sake of it and then going, no. We are still observing what is happening. Now that you are making, let's say, 10,000 per month, how do we help you get to 20,000? We are still advising you.
I'm quite interested because I'm guessing when you started, like your main goal was to get to small-scale farmers in terms of like helping them get capital or insurance. Do you think like how you're approaching it, you're still able to push a little bit of a section of farmers who you think maybe you're targeting or might be helpful by the product you're putting in the market?
So as I mentioned, we are a data and finance company in livestock value chain. We are definitely in the learning processes of getting to be better and better because we are not yet at the apex of anything that is agricultural financing. If national credit is less than 4% in agriculture, that only shows the amount of learning that is needed. So what we really try to do is solve 3 things really. The first one is the data inefficiencies of farmer as a customer as far as farmers are concerned. The second thing is the lack of financial models. So that now moves away from the farmers and it goes to institutions, banks, microfinances, circles, where we sit down with them and tell them, I think you have some room for improvement. You have an opportunity to twist your product a bit, including insurance companies. And then, of course, the third one is we want to unlock capital for assets. It is not Imfuyo that said that livestock can be used as an asset. It is the law. The Movable Property Security Rights Act of 2017. And we really get encouraged by what happens with motor vehicle. We were having this conversation with a local bank and we were saying some 30 years back, no bank would hold a loan against a motor vehicle. They did not even want to hear such a conversation. I think if you brought such a conversation, you'd be thrown out the window. But now, banks are definitely giving loans against existing collaterals, which in this case are motor vehicle. What changed? Did the law change? Not really. What changed? It's just the mindset and the way the product is redeveloped. I remember at one point, banks did not want to get into partnership with car trackers. For some reason, banks felt as if that's not their area, but now they have partnerships with car trackers. They have partnerships even with the insurance companies through bank assurance. At one point, it was seen as if you want to buy insurance, you go to the insurance company. Now, if you want to buy insurance, go to the bank. The bank can still sell to you as an agent through bank assurance. In other words, what I'm trying to say, just to answer your question, is that we are looking at this problem in a much more diversified way, because we want to address the actual product going to the consumer, in this case B2C model, the farmer. But we also want to address the engineers of the product at an underwriting level, if it is livestock insurance, at an underwriting level if it is banks and microfinances, because we still feel some of those products are not farmer-centric. So our path is not just only creating a product for farmers, but trying to touch literally the whole value chain or the whole ecosystem. And we even haven't talked about slaughterhouses, abattoirs, feedlotting, fodder financing. All these are opportunities that just need a bit of modification as far as lending is concerned.
So you're saying this is a journey, this is a process. You're not going to get to all farmers at the same time. So you're going sort of to iterate or change your product as time goes and as you get more data around it. So I'm still trying to figure like what kind of data then are you collecting from farmers to guide you in terms of helping farmers? Because I'm thinking like for a farmer, they are usually thinking, how can I increase the productivity of my cows? Ultimately, probably give me more milk so that I can sell more and make money. Or they're trying to see the loopholes in which they can reduce their costs, right? So where in that bracket do you find yourself?
So you find most farmers actually know what they want. We didn't know that. We didn't know that statement, that most farmers know exactly what they want. So you bump into a farmer in a farmer group or an individual farmer somewhere in Moranga or Kajiado or wherever else, and possibly they are keeping dairy goats as an example. They'll tell you, I'm currently, maybe if it's one goat, I'm currently doing about 2 liters at the highest. But I want and I desire to do times 3. And then they'll even tell you exactly what they want. If I was able to buy 2 more goats of this breed, of this type, then I can be able to move to about 6 liters. Then they will also tell you, I am missing money or I'm lacking money to actually buy that goat. So immediately you know exactly what they want. But to arrest the risk, you also need to understand that it's not just any goat. So we start looking at the type of goat, the breed, and the feeding. And is it insured? Are they collecting data? We try to just modernize and make it professional so that as they move towards more liters, they're making more money, but in a secure, sustainable way. Because at the end of it all, we are also grounded on 3 things. Food security, which means for us we need to produce more milk and empower communities. Financial inclusion, the trainings that we do in terms of financial literacy, financial products, and creating new products, and even ensuring their livestock. And that one is impact. It gives us so much joy when you hear a customer say, I started with about 2 goats, now I have 20 goats. I started with earning about 400 bob per week worth of dairy goat milk sales. Now I'm getting maybe like 6,000. It really, empowers us and encourages us, because you'll hear a farmer say, I wanted to buy an extra goat, I couldn't. But now because of the milk sales, if I save a bit, I'll be able to buy a dairy, an extra income earner or milk producer. Because of these funds that I have saved, I've been able to pay school fees for my child. Because of these fees, I've been able to do a development here, etc., etc. It's an ecosystem thinking. And that's where now Imfuyo comes in, because we're not just looking at credit. We're looking at the whole ecosystem. And it takes a bit of process flow thinking to look at it, because there are many things you can do with data and finance in that livestock value chain.
So where does the tech bit come in? Because the way I'm getting is that you walk into a farm and sort of help give them structure into their farming system. So where does the bit of tech come into that's helping the farmer?
As a data and finance company, number one, we collect data. So for us to collect data, we start from a tech perspective. So with the farmer, we have a software that helps us to do KYC, know your customer. So we'll collect as much relevant information as we can concerning the farmer, from the names, the age, the ID, the year of birth, how many cows they have or goats, their different sources of income, how much they earn, historical, maybe financing data. All these different information is important, including to, are they married, are they not married, do they have kids, do they own the land, what's the size of the land. We collect all these data because it informs our model. For the livestock now, we use hardware. We have ear identification hardwares that we put into the cow's ears, giving a cow an identity. Because again, we fall back to the Movable Property Security Rights Act of 2017 that says you can actually use that cow as an asset to acquire a loan. That means then you need to have that data. So we collect the cow's information first, or the goat. Once we target, we give it an ID. It also has a name. Then we collect data like such as the breed, the type, health data, feeding, production, all these data, we bring them together. So that data helps us at least to see two moving parts. This is the human being, under KYC. This is the animal under a term that we created called KYL, know your livestock. And then now, based on that, we are able to really address the concern of financing. At that point, it gets very clear. The farmer is saying, one, I need to add a new cow, which is 50,000. Now that we have your data and we have the data of the livestock, and the livestock has been tagged, possibly even insured, then where are you going to get the 70,000? That's the next question. Where now we can either talk to our financial partners, banks and microfinances to lend to this farmer. If at all the farmer has been able to meet the set risk criteria by the lender and ourselves. So that's how we use data. In other words, technology.
Yeah, okay. Yeah, I get it now. Because now, once you have all the data, then you can you have a history and a clear indication of what the farmer does. So I'm thinking from an insurance perspective, how does that work as well? Because let's say there's a farmer, they're into milk or goat milk production. They come to you. How does the process of onboarding them to an insurance work?
For farmers who know, it becomes easier for us because all we are doing is just signing them up. And signing them up is basically what I talked about, KYC. We are collecting their data and also tagging their cow and collecting the cow's data, the same process I mentioned. And then now we are presenting this data to our insurance partners to then just insure the cow based on the data we have, the tagging we have done, and the valuation done by the veterinary officer. And then we'll calculate the premium, and then they can be able to pay if they are paying cash, if there's no financing to actually pay for the livestock insurance. Now that you've brought up insurance, I think it's important to actually mention something there. The process for livestock insurance is still a bit too traditional, unlike other classes that have seemingly gone a bit further. And I understand we are still at a point where we are developing these products. So if you want to insure, your grandfather, as an example, in the ushago, the cow, that means definitely you have to be there in the flesh. You have to assess the asset. You have to also assess the farmer. Then you actually have to collect the data on paper, which is literally an insurance application form. And then you have either to send it via WhatsApp or via mail, or present it to the insurance company to actually underwrite product and give a cover. We feel as if there's a bit of innovation needed there. Of course, there are now online processes for you to do some of this. But for livestock insurance, we feel as if it's a bit slower and it's still a bit in the traditional ecosystem. Those are some of the things we try and help insurance companies to think how to develop it, because we are collecting data. We can be your ground person. We can automate some of these things. The only thing you do need really is the actual data as is on your application form. Why do we need paper all the time? But it gets worse because now, why would the farmer be paying 3,000 as an example, or 4,000 or even 5,000 per year for livestock insurance, year 1, year 2, year 3? And the only thing that you give them is mortality cover. In other words, the only way the farmer can benefit from livestock insurance is when the cow dies. So what's the sense of that product? So there's a very good farmer of ours in Kirinyaga County. He does breeding and he also does fattening. And he has his dairy outfit and he has his beef outfit. And we were asking him, let's just insure these cows. And he was saying no. And he was saying an affirmative no. Mainly because he was saying he has already insured them in his own way. And what he meant by that is that he's already put security features. There's a way he's built his herd, the structures, in a way that it preserves the cow's immunity, helps in production. There are many things that we do there. He's also put in some farmhands who do certain things. The cows even have some music playing in the background. They have some brushes, all these nice things he has already done. So the question he was asking us, then why should I insure my livestock? Because the only thing that you guys will pay me is when my cow dies. What if a veterinary doctor comes in? Will you meet the bill? Or if the cow didn't die in year 1, can you at least give me 2,000 back? Or even if it's 100 bob back? So these are the different types of questions. He went further and said, because he has about 50 cows, if he wants to insure all of them and he doesn't have the money? Are we going to finance him so that he can pay month on month? Or are we going to cover him and then allow him to pay month on month? So all these small moving parts really don't change the product. They just modify it. These are some of the conversations that we really are pushing with insurance companies.
Interesting. Yeah. And I think that's a valid concern from farmers. So if the only way they are going to benefit when they're insuring is when a cow dies, then there's no like really tangible benefit for them, or there's no incentive for them to be able to do that. So help us get like a little bit of perspective on this, because it's something I've personally wondered on how like insurance works, especially in determining premiums. How does the whole process work? So let's say you have like a goat that is worth 25,000. So how does the calculation work until you get like the exact premium you're supposed to pay?
So of course, insurance companies, as underwriters, they have their own internal framework of designing a product, and what they say is that they will charge a percentage of the value of that asset. So you'll find it to be about 4.5%. That's where they start, or 4.5% of the value of the animal. Let's say it's 100,000 as example. I think that's 4,500 if my math is correct. So that 4,500 is the premium that the farmer needs to pay for that livestock, assuming it's 100,000 based on that mathematics, will be insured. You pay one-off, it's an annual cover, and the benefits are only mortality. They are only realized post-death. So that's how it works. They calculate a percentage of the value of the livestock, and the benefits are only realized post-death. It's a mortality cover, to be honest. And the flowness in that model, if I could digress for a minute, is the fact that they really are not looking at it keenly. It's not like human medical cover. Human medical cover, they have really extensively redeveloped, re-engineered, and created many ways, of making sure that the product works. How often will a farmer get called by the customer service of a company A, B, C, D insurance company and say, hey, mkulima, how are you doing? How are your cows? Are your cows still okay? Are they still alive? Rarely. So there's a component there of not only calculation of post-selling, because we meet a lot of farmers on the ground, they say, oh, my cows are insured. Then you ask them, okay, when was the time you paid premium? This date. Oh, okay, and we are speaking about that date, so it's already expired. But they still believe it's insured because no one is following up. And we also find others who are saying, if my cow dies because of ABCD, they will still be paid. Yet the policy document says something else. So really, we are using a traditional, so to say, quote unquote, livestock insurance. There's absolutely no barrier to innovate in that product. Risk can be arrested, because the risk most of the time is the cows will die out of deaths, and it can be a high claim. This is understandable. It can be a pandemic or mass death. This is another risk, very well understood. The farmer can do insurance fraud. That's also where we come in as a ground man on the ground. We've tagged the data. We are keeping records. We have a one-on-one with the farmer progressively, and we are giving these reports to insurance companies so that they know it's indeed true that the cows are still alive, they're still tagged, these are the pictures, this is the data, this cow was sick, this cow has been treated like this cow is facing these challenges, and indicatively, maybe this cow may die because of ABCD. What are you going to do? So that gap there is huge. That's why it's not just about calculating, but also them going above and beyond calculating to actually being in a relationship with the farmer post-collection of premium, because what they do is that they just collect the premium and then forget about the farmer. At least in what we have seen on the ground.
After the cow dies, how much are you going to be paid?
They pay up to 90% of the value because of something they call excess. All these are good, but they can be re-engineered a bit. Just re-engineered a bit to make the customer a bit happy. Why would you want to insure your 5 cows, assuming one is 3,000, 5 is 15,000, for year 1, none of the cows died, and when your cows got sick, even a vet officer, even through the insurance company, was not sent. So it's just a bit of re-engineering, kidogo too, without really going against IRA, Insurance Regulatory Authority, or AKI, Association of Kenya Insurers, of just internal underwriting policies. And then again, there's willing buyer. It's called willing buyer, willing seller. If it would be right to increase the percentage. And the farmers are saying, I want the premium product. You see the way you want to buy something more expensive because you see value for it. And if that is possible in that insurance product, then it makes sense. Because now this farmer can actually say, I've bought a premium product which comes with a veterinary officer who is maybe paid through the insurance company.
That looks like a product I can personally buy, in terms of you're not just like buying an insurance, but you're buying sort of extra information or extra help that is coming with it. So that's a pretty good one. And then I'm thinking in terms of data. So you've collected all this data, you have the data. How are you processing? Because of late we have conversation around AI, and I think there's a time we used to talk about machine learning and stuff. Are you using any of those technologies to sort of synthesize this data to make it more palatable to, let's say, insurance companies or someone who may need that data?
So we have our own internal agro-score. We call it agro-score, agricultural score. So we've built an algorithm internally that is using machine learning and a bit of AI as well. The more we feed it data and the more we give it instructions, the more it gives you different scenarios of a credit profile. And so that's one of the things that we are doing. The other thing we are doing is that we've done an AI pilot, artificial intelligence pilot, with a Belgium company where we were reading the cow's face and the human face, just to add an extra layer of security as far as risk and due diligence is concerned for the human being and for the animal. So we've touched a bit there, but we definitely want to touch more and more. I want to believe any ML and AI technologies need more and more and more data to be able to actually develop better and better efficient products.
Yeah, because I've seen similar products in the Netherlands, like they're really, really advanced, where like they have like a sensor on, let's say, an ear tag of a cow, and they can be able to predict when this cow is going probably to give birth. So I think there's a huge potential there, but from a Kenyan perspective, how far are we, or how close are we to that?
I love that question, and I'll tell you why. When we began the business in late 2020, we thought technology would solve our problems as far as livestock value chain is concerned. And we have really pivoted over the years to get where we are, because it's a changing ecosystem, to be honest. It hasn't been properly developed. So I want to answer your question in length. We thought that technology would solve everything. And so we started researching, just like any other young organization. We saw the likes of the tech you're talking about, that you can have a cow wear a collar that reads the cow's bodily functions the same way you wear a smartwatch. You can know that this cow has walked maybe 50 steps, as an example. It's rested in one position for about 2 hours. That shows something is wrong. Possibly even indicate that the cow is on heat, so it needs, all these different things. And so we sought out to say, okay, we need this tech. And we started talking to tech companies outside of Kenya that have done that tech. Some of them sent us some devices for us to pilot. And some of them were quite expensive, because they were saying they are not going to come unless we pay for them an engineer who's coming to the ground. We pay for the hardware and we pay for the software. So it comes as one package. So some of these solutions are very good, extremely good, but they're not for our market. Now, when you start looking into our market, as I progressively answer your question, we realize even though we had good hardwares from partners outside, we would go to the ground and find the following problems. One, low to no internet connectivity. So, of course, expect no Wi-Fi in most rural parts of the country. Expect no strong signal as far as mobile telecommunication is concerned. The Safaricom, the Airtel, they are not very strong. And expect little to no internet, whether you're talking about 2G, 4G, or 5G. So now you have a hardware here that should be doing all those amazing things, but it can't. Problem one. Problem two, some of those technologies, especially the ones in developed worlds, require a farmer to be interfacing and engaging with this platform, which is good because the farmer has a right to as the consumer. But unfortunately now in our case, most of our farmers are elderly and they are not technologically savvy, and they are somehow not literate when it comes to technology. So that means then if you're giving a farmer a mobile app, and these are things we tried, we realized that they have no interest in running the mobile app. Number one, maybe they don't have a smartphone. And if too they have a smartphone, they don't know where to get the mobile app or even where to download it, where to open it from. 3, they don't even know the processes there inside. Even if it is just login, they need to sign up. So you are being taught, you're being forced to teach this farmer what is internet, what is a mobile app, how should it work. Then if everything checks out nicely, for this example, maybe they don't have internet. And they don't have internet either because they can't afford the bundles, or they don't know how to buy them, or possibly there is no good connectivity even if they buy. So you're doing a lot of education there to introduce that technology, and that's tiresome and it takes a lot of time. And then now finally you have the fact that that product will not work the way it has been developed if the hardware is not properly speaking to the software because of technological gaps and other socio-cultural problems. So we tested it on the ground and we learned that. And the farmer doesn't have the happiness to record the data for you. So you record the data yourself, even for quality purposes, and just being able to control the way the data is coming in.
So we have a long way to go in terms of integrating such a product into the Kenyan market.
We do, and it's not the farmer's problem, neither is it our problem, so to say. We didn't cause the problem. It's an infrastructural problem, because if we still have challenges with connectivity on the ground, then the government definitely needs to get to a place where connectivity challenges are not as high, to allow innovations there.
That actually answers my question, because we see a lot in terms of, especially in the fin and the agri-tech sort of space, we see a lot of players who come into the local market or the African market and they want to introduce a product. They don't usually make the progress that they wish to do. One, because as you mentioned, probably there's like a structural, like a technological gap, or they also realize that they need to have like a full value chain sort of engagement. So let's say you have like a financing product, and then after the farmer has grown the product, they sort of come to you again, they want the market for the product. So it sort of puts you in a situation where you sort of have to have like a full value chain kind of product for you to be able to make sense to the farmer.
Correct. You see, there's something there. Unfortunately, most of the tech that goes to agriculture, and if it is tech that is borrowed from developed nations, most of them ends up failing because it is developed in a boardroom setup. Even the Bible says a man thinks their ways is the best. I think this is in Proverbs. So from a product development standpoint, you'll find that people are developing so amazing solutions, perfect solutions on paper and in the boardroom. But when you go to test it on the ground, and mainly so in our ecosystems because of lack of infrastructural support, developing markets, you find that it fails. I have a friend of mine who really wanted to install the cow collar neck tags, and he brought some from outside, and he was sure it's going to work. But when he went to the ground, he had other challenges of connectivity. He needed now to go back to the manufacturer for certain instructions. It became too much work. So we still have a long way to go as far as technology is concerned. And you cannot build tech in the boardroom and then deploy it and expect it to be successful. As far as agriculture is concerned, it actually should be in reverse. Go to the ground and test without tech. Start developing something that would meet that specification, then possibly improve as the infrastructure also improves. Yeah.
Because I also saw you have like sort of a market platform as well. Was that also informed by like some of the challenges you had?
Yes. So that's what I said earlier. We never set out to build this ecosystem, and we still are not yet where we need to be. I'll tell you that, because the market demands are dynamic, and you're coming in to solve one problem, you realize there are 10, and that's the beauty of it. It makes you even more innovative, because now you're telling a customer, fine, you have qualified ABCD, here is maybe 100,000, buy the cow. Then when they buy the cow, let's say if it's a beef cow, for purposes of this example, they're asking you, can I get a better market? Where can I sell this cow, because I've fattened it for the last 6 months? Can you tell me, is there a company there in Nairobi or wherever that can buy this cow at a better price? Or can you help me push this product called a fattened cow to other farmers? So the model informs itself. It keeps educating itself. So you cannot solve just one thing and live. And the more you solve these things, the more you make money.
So I'm also wondering, because part of your work is actually you are president of data analytics in Kenya. So from a data perspective, it's fair to say we have a long way to go as a country. When it comes to data, then especially in like the agri space, who should own this data?
First, the data should be owned by the government, for sure. I think there are bylaws and drafts and even laws that say that veterinary data, treatment data should be owned by the government. It's only that the enforcement is not that much. It should be higher than that, than what is currently there. So the data should be owned by the government, because the government informs a lot of things. They inform policy, they inform development. You've seen instances where you hear the government is going to give subsidized fertilizers. So that means then they are collecting data of the farmer and possibly data of their farm, of the farm. Then they are able to make a decision. They are able to say they are going to put aside maybe 200 million for about 100,000 farmers. So the data should actually be owned by the government, to be honest. That's number one. But the government doesn't work alone. There's the Ministry of Agriculture and State Department of Livestock, as far as we are concerned. And then the other parastatals, the Kenya Veterinary Board, the Kenya Veterinary Association. And then you have strategic partners such as ILRI, International Livestock Research Center, CALRO, and so on and so forth. So the data should be 100% owned by the government. The question is, what is happening that data is not being collected as it should? And is there any development around that data? Now, you have other bodies such as ODPP, I think Office of the Data Protection. They should also just step up a bit in terms of agricultural data. Of course, they are doing amazing things. We acknowledge that. But as far as agricultural data is concerned, I think there's room for improvement, to be honest. They should help us, people in innovations, at least to be able to, have a framework as far as agricultural data is concerned. Because agricultural data is very scarce, and it informs a lot of things, because it can actually help us to, solve some of the problems we go through on the ground. Financial models that need more data to be able to be developed. Imagine a situation where, as I just emphasized on the question, imagine a situation where the government has decided, together with financial partners, insurance companies and banks, and maybe the Ministry and Office of Data Protection, they have decided they are going to make sure that agricultural data is available for innovations. Just think of that. It even becomes sexy for students in agriculture, students in technology. They start looking at it as something that they can innovate around, just to increase production and all that, yeah.
You are very much in the intersection of livestock, and as we know, there's been a lot of talk, especially now when we are talking about climate change and stuff. As someone who is very much entrenched in the livestock sector, how do you always approach such criticism?
It's an interesting one, because there are two problems. So there's the problem of emission of methane gases, which is, I think, the most toxic gas as far as climate is concerned, because it's the one that stays for the longest, I think, in the clouds. So there's that problem. There's the second problem, which is lab-engineered meats, just to save the animal and better for the environment, etc., 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 etc. All these things are there. but I don't think they are in any way affecting the development of livestock enterprises as far as data and financial models are concerned. Recently, we did a public lecture with our partner JKUAT, Jomo Kenyatta University of Agriculture and Technology, and we called on one of our partners from Switzerland, a company called DSM Pharmanic. And we invited Dr. Mike Kinderman, who gave a public lecture on what they've been doing concerning methane emissions. So they have developed a product called Bovea. And Bovea is a product that tries to cut emissions of methane from the livestock. So there are initiatives that are pretty early on as that. So as far as Imfuyo is concerned now, in this time and this market, we don't see it as such a big threat. Then secondly, even the farmers on the ground are quite skeptical, because the farmer is saying, if you want to give my animal a certain drug to reduce methane emission, how is that really helping me as a farmer? So some of these conversations are too ahead of time and too climatic. They are too, for lack of a better word, they are a bit controversial. Because farmers are saying, allow me to produce more milk so that I can better my life now. Anything that is methane, we can talk about it some other time. But I do not dispute the fact that it is also affecting the climate. So as far as methane emissions is concerned and climatic conversations, as Imfuyo, the much we do is we try to do a circular economy as far as circular agriculture is concerned. We are helping farmers get the best breed. We are helping them to be able to feed them in the right way. We're helping them to be able to produce manure, which goes back to the same soil, enriching the soil and generating fodder, and the cycle keeps continuing as they produce more milk and they produce more meat. So the only way our conversation around climate is concerned is, are we helping farmers at least produce much more quality manure for the ground? Well, the guys of biogas are saying we want more. Earlier on in business, we used to think that we really need to solve every problem. But now we realize, let us just solve what we know in the best way that we know, and then progressively just move forward as far as methane is concerned.
Yeah, and also we need to realize like every context is sort of completely different. And I think once we understand that, then it helps us ask the right kind of questions and possibly actually look for the right solutions. Because I think as you mentioned, if we look at like in sort of a whole systems approach, then you realize, okay, livestock is a really important part of agriculture, right? It can sort of accelerate the decomposition process of, let's say, napier grass. Where if you were to put it in the ground to decompose by itself, it will take much longer than if the cow would eat it and quickly translate it into like manure that farmers can easily use in our local context. So once you put all those things together, then it sort of makes sense.
This is true, and allow me just to add to that as well. You see, and this is controversial. Just because it works in the West, it doesn't necessarily need to work here. Just because the West is talking about methane emissions, it does not necessarily need to apply here in smaller ecosystems like what we do, collecting farmer and livestock data, building financial models to help farmers access capital, produce more milk, more meat, and even feed their families. We still have such a huge gap. Are we solving poverty at the ground before we talk about methane emissions? And I agree it is a problem. But now when you flip the context to our current setting, really, we would rather help farmers produce more milk, more meat, make more money, transform their lives, before we actually have a climatic conversation that really looks at methane emissions in a specific farm. It's a good thing, and we actually on track to trying a test concerning the use of one of the additives that we'll be bringing into the country through a partnership, but on a pilot basis, not because it's game changing, on a pilot basis, and that's the problem really, that as far as startups are concerned, if I digress for a minute, because I feel this is a platform that we need to speak these type of things. Just because the American style of investing into startups works in their version, in their world, as far as agriculture is concerned, it does not necessarily mean it's the same context. you'll find a startup that is trying day and night to build a methane emissions solution. And they want to try and cut emissions in livestock in a country like Kenya. That is well good. But what are you trying to solve? Are you driven by the Western wave, or are you driven by the actual problem on the ground that you need a solution for that is realistic on the ground? Context really matters.
Something I also interesting about you is that you are able to raise some money. So from like a startup point of view, especially for, we have guys listening to the podcast who are involved in the agri-tech space, and they have a product they want to take into the market. They're looking for someone to back them up or like finance their startup. What are some of the tips you can provide for them in terms of if they are trying to go into the market to raise money?
First things first, and again, we speak out of our own practical experiences. We are solving a big problem, and we are solving a very, very difficult problem. So we find that to be a very good selling point when you're talking to an investor, because it's a problem that is available, it is ready, and there are workable solutions around it. Not only us, but others have solved it. So it becomes easy. So if someone is looking to raise money in the agricultural space, then they need to be asking themselves, which problem are they solving? And is the problem really investable to a good degree? Because the investor sees not a 2-year play, but a 10-year play, maybe even a 50-year play. That's the first thing to ask. Then secondly, which type of capital are you going after? Earlier on, we really tried our best to get capital from banks and microfinances in the form of a loan or even partnership. And we really, really pushed it. But it never came through. And mainly because of the disconnects. You find that banks every year are saying they want to increase the agricultural portfolio. But when a partner like Imfuyo comes on board and tells them, hey, we can help you move from maybe this percentage to this percentage as far as your agricultural portfolio is concerned, and so by that extent, invest in us or give us a loan that is within your ecosystem. We can draw down some money and do some work, and you're making money. They don't see it that way. So the type of capital really matters, because you may be chasing capital that will not help. That is number 2. Number 3, the narrative and the illusion of the American style of investing doesn't work in agriculture. And if it does, there's a reason behind it. So at times, you might be better off going after grants, going after organizations that are really investing in what we call catalytic capital or developmental aid. Capital that is just meant to grow a problem at a certain stage before you get to a certain stage, and then you actually start making money. And such capital is not easily available, because the venture capital firms that are mainly here, funded from the US, they just want to hear a big story. Some of these things nowadays, we are so clear, we don't even lie. Nowadays, we actually, as an organization, as part of the advice to someone who could be listening or watching based on investments, we are very clear. We have our own investment policy or mandate. We will not take money that does not behave like this. We will not take money that does not support our cause. So we go after certain capital that is meant to help the business move forward. So for anyone that would benefit from the question that you've asked, number 1 is, what problem are you really solving in agriculture? Is it a problem that is investable and can be looked at as a legacy thing? That's number 1. Number 2, the type of capital. What type of capital are you going after? Do you just want to be in accelerators? Do you just want to be in incubations? Those things are fancy and they are nice. And they look very good on paper. And they look very good in PR and all that. But you need a partner who sees you in terms of capital and sees you're solving a problem that speaks to them. This is where big agricultural organizations in Kenya also need to invest in startups that are doing what you're trying to do. For example, a big feed factory or manufacturer needs to be asking themselves, how can they invest in such a business like Imfuyo and others that are trying to increase the uptake of fodder or the uptake of their feeds? So I think for anyone that would be looking for an answer, There are only three things. Look at the problem you're solving, the type of capital you're going after, and how you're going to implement.
And I think once you get into that stage of you want some money, probably you have some kind of product that you think will make in the market. So you are in the sort of right place to begin with. So the other thing I always try and ask my guests is in terms of the youth, right? We know we have a huge problems involving the youth, and we have, to like quite an extent, people pursuing, let's say, agriculture in universities and technical universities and colleges. What is the best way for them to get involved in agriculture?
We were talking to a marketing director somewhere in a university I'll not mention, and he was telling us they're having a challenge with the uptake of their diploma in agribusiness. And then we asked why. He told us youth do not want to be involved with anything that is agriculture, because there's still the notion that agriculture is dirty, agriculture doesn't pay, agriculture is backward, people don't make money, and all those things are just narratives. They're not true. So for, I think, any youth that would be looking into getting into this, I would, especially if you're getting into the core of agriculture, it would be amazing to look at two areas. At least I speak from where we are coming from. Dairy goat. A dairy goat is an amazing business because the cost of production is not as high as a dairy cow. That's number one. Number two, if you're producing, even if it's 5 liters, let's say from 3 goats as an example, with all things considered, and you're producing about 3 liters, out of 3 goats, as an example, per day, and you're selling even if 100 bob per liter, that's 300 bob. If you're taking, the milk to a regular buyer, and it's being bought maybe for every 20 days, that's 6,000. If you keep repeating it, then you're on your way to having a much more bigger income. And dairy goat doesn't need a lot of investment like the dairy cow, So in fact, we would even challenge youth that would want to get into this business and they are sure they want to get into it. We can work with them. We can create a structure and create a governance under a youth group, and then we go after getting capital, and we help them in understanding how to do dairy goat. So for any youth, I would highly recommend the dairy goat, something we have tested and proven.
So in terms of market, you say there's a market for such a product in our local?
There is. And what is interesting is that it's not spoken about as often as you'd like. Earlier we were saying, how often do you hear someone tell you they have taken a glass of goat milk? Rarely. But a glass of dairy cow milk, a lot. There's a huge silent market for dairy goat. Huge. And now it's even gotten interesting because people are doing byproducts. They are developing soaps out of goat milk, cream out of goat milk. And some of these products are extremely expensive. So that goes to show you the dairy goat market is there, and it is actually valuable. We have some farmers who've kept dairy goats, not because they wanted, but because they went to the hospital and they were told, because of your immunity, because of the arthritis that you have, make sure that you at least drink 1 cup of dairy goat milk. And then they try to look for it, they don't get it. They say they will buy a dairy goat, and they start doing the business, and then now they love it. They are not only drinking it and it's improving their immunity, but they are also selling it to other people. There's a big market, but it's a silent market for dairy goat. Yeah.
And I've seen a lot more people speak about it. And as you said, if it gets more mainstream, maybe you can walk into CJ or like Java and order a cup of goat milk, or like cappuccino of.
In fact, dairy goat milk produces one of the best cheese. It's salty, which is good.
I think we've had a really, really great conversation. So I always try and ask in terms of like your perspective. You can sort of help paint us a picture, let's say 10 years from now, since you've been involved in this sector and probably will be involved in like 10 years. Where do you see it heading in terms of from an agri-tech perspective, from a data perspective, like from a technology perspective? Where do you see it in 10 years?
First things first, I see it as a scene that will improve production. Production is number one. In 10 years' time, production will be higher because now there is more data. Most farmers are available for data collection, and they appreciate it because they know what you shall do. So in 10 years' time, I see it as a factor of production. Secondly, I also see it post 10 years as a factor of better financial products and even non-financial products. The intelligence needed to keep a dairy goat is a subject for discussion. There are new technologies and new education and new ways of breeding dairy goats and different breeds and all that. All these are also going to be drivers of the same. Thirdly, I see the government and policy regulators and all the other stakeholders involved. I see them really creating a framework that will make sure that anything that is data, anything that is finance in agriculture is held higher to a point where it's available for not only innovations, but for changes as far as production development is concerned. So in other words, I see post 10 years from now, I see a lot of availability of agricultural data and availability of financial models in agriculture. Just the same way we gave an example of the use of a car or motor vehicle to get a loan in a financial institution. 30 years back, most of these organizations couldn't even touch it, but now everyone is touching it. So I see a situation where agriculture becomes an actual lendable class, especially when you're talking about livestock.
Yeah, that's a pretty good optimistic worldview 10 years from now, which is good to see actually. And that makes the agricultural sector more marketable, I guess, in a way, because now it will be more tech savvy.
To add to that, if you allow me, when you go to YouTube and you go to Business Registration Service and look for a video called Movable Property Security Rights Act, you find what the government has been pushing, and they did this a lot in 2021, they are late 2021, where you find a man who seems to be Maasai, dressed as a Maasai, with a cow, walking to what seems to be a bank or banking hall. But the soldier at the gate is shocked and refuses for this Maasai man to get into the bank with a cow. But a lady who seems to be a manager of the bank walks out and says, "Hey, Maasai, don't you know that nowadays we accept a cow as an asset to acquire a loan?" So the Maasai man and the cow are allowed into what seems to be a bank. And inside that bank, you can actually see the Maasai man next to the cow doing some paperwork. And then he walks out with a check, as form of that we've actually gotten money. So that being the case, to extend to what you were saying, 10 years from now, I want to believe there'll be greater innovations that really solidify that model. If the government has already kicked off such programs, then definitely we are on our way to getting a better, solid product.
Yeah, interesting. Yeah, that's a world I would definitely love to be involved in. Thank you very much for your time. I usually have this segment I call rapid fire questions. So what I've done is I've prepared like 10 questions for you. The idea is I will throw those questions to you, and then you'll give me quick answers to them. And hopefully guys will get to know you a little bit better if it didn't happen through this conversation. So are you ready?
Ready.
So the first question is, what is one African farming challenge you think technology alone cannot solve?
None. Tech might solve everything, but not independently tech. Tech plus non-tech related initiatives. A good example of what we are doing. Tech is not solving everything, but it's really making it easier for us. We collect the data, but we still need financial modeling from financial partners, insurance companies and banks to make the whole chain work. So I don't think there is none.
Okay, nice. Second, what is the most underrated asset African farmers have that we often overlook?
For sure, Imfuyo. Imfuyo means livestock, so livestock is the answer. But now Imfuyo means livestock, so Imfuyo.
Third question, who is one person or a leader who inspired you most in your tech journey?
One that I really try to resonate with is Elon Musk. I think just like many other people, mainly because of his statement. I think he said that entrepreneurship is like eating glass while staring into the abyss. I think that's what he said. Now that is so real in entrepreneurship. Oh my. Anyone who is in the journey of entrepreneurship knows what I'm saying. Anyone who wants to get into it, Good luck.
Very true. Okay, the fourth question, one thing you wish every African farmer will start doing with their data today?
Keeping it, because some collect data, especially if it's immunization treatment, a vet officer has been called, they write somewhere, but you'll find some of those books or papers get lost. Can they keep that data?
I also remember my grandma used to do such a recording. So they have some data, but I don't think they keep it well enough, like, to be useful.
And that data is important mainly because if you want to buy that cow from your grandfather, as an example, your grandfather has some negotiating power, can say, this cow has been treated like this, like this, like this, like this, so I want you to add 10,000 on top.
Fifth question, one thing you wish young Africans understood better about agriculture?
That it is actually an employer. It can employ you even better than a corporate job. It's only that it needs you to first of all fail, and then fail again, and then now get your path.
Sixth question, what is one thing about data that still fascinates you today?
A lot of things. Data, and as I mentioned earlier, we are still not at the apex. Data speaks in many ways. The more data we collect, the more we see things that we've not seen. So exactly a pattern. There's a pattern that data creates for us. So the more we collect, the more we see new patterns that we had not even seen. And let me digress quickly here. There's a time we were doing a training on the ground with some financial partners and some insurance companies in Narok. And as much as we had collected data, we know these are the number of farmers, this is the cows they own, blah, blah, blah. This is what we are training them on. This is the literacy material we have, exactly all that. One old farmer, one old mzee, stood up and said they would want to see a situation where there is a livestock insurance cover that immediately covers the cow and the baby of the cow, if I can say the calf, immediately, because the calf can die as well, and that means they have lost. That was it was posed as a question, by the way, where they were asking us, do you have such a solution? So we all looked at each other, because first we don't know of such a solution. So now, in other words, data keeps on informing you. The more you have, more. So that's the most fascinating thing about it. Yeah.
Seventh question, what is one thing you wish everyone understood about African smallholder farmers?
They are highly underfunded. And allow me to digress there for a minute, of course, to explain it a bit. You'll find a farmer who owns fodder, but they don't have the money to buy the fodder. And possibly they don't even have the seed or the stem or even the land. And the government's initiative in food security is to empower farmers to produce more. So literally what is missing there is not only other factors such as literacy, training, blah, 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 but funding. Farmers are extremely underfunded. Case in point where you have 4% of national credit going to agriculture.
So eighth question, what is one bad piece of advice about tech or startups that people should ignore?
Boardroom-based solutions. And I explain. Boardroom-based solutions are where you think you've built the best product because you sat down and just created something. Whether you did it as an individual or you do it as a group. I think it should be in reverse because of the context of Africa and the nature of infrastructures we have. If you're trying to solve a problem, let's say, for example, in agriculture, then I think you need, first of all, to be in the problem. Go to the ground and see farmers don't have seeds, and you want to create a marketplace for seeds. Then ask yourself, how do they currently buy it? From where? Then now design that into an actual product, so that now, as you bring a tech, it has not been informed by just online research, but practical ground research. Unlike in developed markets where, and this really makes me sad, you'll find in developed markets a company that has just developed some few features on an e-commerce platform is raising millions of dollars. Well, here we need those millions of dollars to actually develop actual solutions to actual problems. A New Yorker, as an example, will not die or miss food just because a company that has developed a mobile app that behaves in a certain way has not developed it. But here, if you do not build an ecosystem that is putting food into the mouth of people, you have a problem here.
Yeah, huge problem. And I think they have an easy access to capital than we do. So the world is just unfair, I guess. All right. So ninth question. What is a failure or a mistake that taught you your biggest lessons as a founder?
Well, there are many. And let me try and see if I can pick the first three, because I have a jar of them. I just want to try and pick the first one. Number one is what I've been referring to. Don't build boardroom-based solutions. You'd rather, especially as far as agriculture is concerned, just go to the ground and understand it as a problem. Because I mentioned earlier, we brought tech hardwares that work perfectly in developed nations, but on the ground was not working. So run away from a boardroom-based tech. That's the first one. So just avoid boardroom-based tech, especially in agriculture. Go to the ground, get dirty with it. Then from there, develop something. So that's the first one. The second one is your narrative as a founder is only controlled by you. And your narrative as a founder is only given birth by you. Because earlier on when we started, we had so much objections. People who advise you, yet they have never built a similar product. They're telling you why this can't work or why that can't work and all those things. So your narrative is controlled by you. And then the third one, which is the icing on the cake. I have many, but this one is the icing on the cake. There is no prosperity without spirituality. There's absolutely no prosperity without spirituality. Now that can be interpreted in two ways. For every action you do here on earth, there's an equal representation of the same in the spirit. Meaning that anything and everything that you do, you then need to be connected to a divine power. And if you want sustainability and tangible results, then you need to be connected to the founder of businesses. And the founder of businesses is Jesus Christ. It's the Almighty God. So that means you are spiritually awake to understand. As I get into business, as I try to get that investor, as I try to get that customer, before I even do those things, I first of all go to my prayer closet and ask the founder of all businesses, the author and the finisher of all those, businesses. The one true founder. He's called the original founder, the God Almighty. You ask him, give me wisdom, give me knowledge, give me understanding. The Bible says in Proverbs 2:6, out of God's mouth comes wisdom and knowledge, and it gives you understanding. In Proverbs 2:6, if I'm not wrong. So that is the icing on the cake as far as learnings for a founder is concerned. If you truly want to be able to be sustainable, you need a spiritual backup, and you need to understand what that means in depth, not because you've heard someone say. You need to go to your prayer closet and you just need to speak to the master who owns everything, and then he will guide you in one way or the other.
So that's really, really eye-opening, and I guess not a lot of people talk about it as much as they should. So that's really, really refreshing to see coming from you. And then the last question, if you could give advice to your 18-year-old self, what will you tell him?
I'll be very honest. I'll repeat what I've said. Look for God. 100%.
All right. Those are 10 questions. Thank you very much for being part of the rapid fire and generally being part of the podcast. Really, really appreciated. I'm sure a lot of guys will find this conversation very insightful in terms of the amazing work you're doing. So if someone might want to just follow you or get hold of you, how could they do that?
Yeah, so one, they can find us through our website, which is www.imfuyo.farm. Secondly, they can reach out to us via LinkedIn. We're very active on LinkedIn. They could also get us through mail, hello@imfuyo.farm, or they could just send us a message on the socials. We are on TikTok, we are on YouTube, we are on X or Twitter. Where we are most active is on LinkedIn. But we of course encourage people to go to Medium and Substack and read all the nice materials that we've written there concerning our business.
Yeah, your writings on Substacks are really, really insightful as well. If you want like an in-depth about the thinking behind Imfuyo and what you're doing and some of the perspective you have around data and stuff, I found that one really insightful. So yeah, thank you very much for making time for the podcast. And if you enjoyed the podcast, make sure you subscribe and give us a really good rating on Apple Podcast and Spotify. Really appreciate that. Till the next podcast, remember to be organic. Cheers.